You're welcome to this channel. We're still on ACC102 Elements of Bookkeeping 2, Unit 4. Okay, we've looked at Unit 1, 2, and 3 in previous videos. So if you have not seen those videos, kindly check the channel. If you are yet to subscribe to this channel, kindly do so that you'll be able to get more videos, be able to get alerted when I post more educational videos on this channel. Today we are looking at Unit 4, the accounting equation and its components. Now we are getting to accounting in detail. So earlier we look at the basic accounting concepts, and we talk about the accounting entity or the business entity, that a business organization is different, is separate from its owners. So the financial transactions of the business should be separated from the financial transaction of the owners of the business. That is very, very important. So it's a very important concept for us to take note of in accounting. All right, look at this review question. Which of the following should be included in the financial statements of a retail shop owned by a sole proprietor? Okay, number one, check paying the shop rates. So rates are like rents. Okay, so that is a business transaction. Okay, so definitely that should be in the financial statement of the retail shop. Number two, check paying the sole proprietor's house rates. Now that is personal, so you cannot include that in the financial statement of the business. Number three, check paying for new cash till. So we need the new cash till for the salespeople, all right, to record financial transactions. So definitely that is for business. So we record number three in the financial statement of the business. Number four, check paying for a new washing machine for the proprietor's wife's birthday. Now that's personal, so you cannot record that in the financial statements of the book of the business. Number five, check for stationery. 90% is for the shop, 10% is for his kids. Now, for this one, you have to be very careful. And as you progress in accounting, you will see calculations, questions like this, that you have to, what we call prorating. That's what we call it in accounting. You prorate. So 90% of the transaction of the amount will go for, you record it in the books of the business. So the 10%, all right, is personal. So you cannot record that against the business books. Number six, check purchasing overalls for himself for cleaning the shop. Now, even though it was bought for the sole proprietor, is for cleaning the shop. All right, so we can record that in the books of the business. Then number seven, check paying for a new outfit which he can wear to work. No, that's personal. All right, so that's personal. It's your personal dress. If you can wear it to work, you can wear it to church, you can wear it to mosque, you can wear it to occasions. So it's personal. So definitely we are not recording seven in the financials of the organization. All right, so the statement of financial position as an accounting equation. All right, so what's an accounting equation actually? Accounting equation simply says, all right, assets of an organization can be categorized into two, all right? Or let me say it this way, all right? Assets owned by the organization, then who is equal to who provided the assets. Let me explain that. Assets of an organization can come basically in two ways. From the business owners. All right, that's what we call owner's capital or owner's equity. All right. So if the owners have not borrowed money from anywhere, so what it simply means that 100% of the assets you will see in that organization are provided by the owners of the business. So in that case, accounting equation will be assets is equal to capital. Okay. So this is what I am saying. For better clarity, we're talking about the accounting equation. Very simple. So here we have assets, what they have. Then you have assets. Or rather than use assets, let me use resources. I think that's better, right? Resources, yes. Resources, what they have. Resources who provided them. Great. So this is accounting equation. So in a situation where the owners provided 100% of the resources, so this is how the equation will look like. Assets is equal to capital. Simple. All the money being spent in the business, right, is from the owners. So assets is equal to capital. So for many SMEs, small, medium scale enterprises, this is actually the accounting equation. All the assets of the organization are provided by the sole proprietor. All right, but with time, the business gets bigger, then the companies begin to get access to third-party funding. So you have CBN, SME loan, you have NASA SME loan, and the rest. So after some time, they start getting funding from third parties. So funding you get from third party, all right, is liabilities, right? Because you have to pay them back. You have to pay them either short-term loan or long-term. You don't pay them back. So the accounting equation will change to assets is equal to capital plus liability. So this is basically what the accounting equation is all about. And of course, you can do basic arithmetic with this. All right. If asset, for example, is you can do simple calculations. All right, at least for beginners in accounting, asset is equal to 200,000. Now, what this means is that let's assume the capital of the organization is 150,000. What is the tell us what the liability will be? Automatically, the liability must be 50,000. It's as simple as that. Okay, so if I note any two of the components of this accounting equation, I can actually calculate any other one. Okay, so I have assets of the business is 700,000 naira. Asset of the business is 700,000 naira. Okay, and I know the liabilities. All right, we're giving liabilities figure to be 300,000. So the examiner now says that we should calculate. All right, calculate the capital. All right, so this is very simple for us. Of course, you know that assets is equal to capital, all right, plus liability. So that means that capital is equal to, you know, from our basic mathematics, it will be assets minus liability. All right. So from here we can know that capital, making capital the subject of formula. Yeah, so that is 700,000 minus 300,000. Very easy. Okay, so that will give us capital. Our capital here is going to be definitely 400,000. This is accounting equation. So resources, what they are, is also equal to resources who provided them. So asset of the organization, if only the owner's equity is there, the asset will be equal to capital. But by the time we start having third-party funding, or we start having taking things on credits, okay, then you are having liability. So asset is equal to capital plus liability. We can also always change the subject of the formula to find with whatever the examiner wants us to find. Okay, so that is accounting equation. Statement of financial position was once called balance sheet. Okay, so but with IFRS, International Financial Reporting Standard, we now call it statement of financial position, which will show us total assets, show us total liabilities, and show us the total shareholders fund or capital. Okay, and basically a balance sheet will still be in this form that I have told you here. Assets is equal to capital plus liability, or capital is going to be assets minus liability. So that is basically what is going to be. So what is an asset? So an asset can be defined as a tangible or intangible resource that is owned or controlled by an accounting entity and which is expected to generate future economic benefits. So whatever you have that you have control over, all right, you must have control. Maybe you have bought it or you have been transferred to you legally, right? So there must be a control you have over it to be an asset. That is one requirement. Number two, it must be able to give you future economic benefits. So you have different type of assets. You have non-current assets and you have current assets. So non-current assets are assets that can generate economic benefit for you for a period of over more than one accounting period. Right, basically more than 1 year. So for example, motor vehicles, land, building, okay, machineries, these are non-current assets. All right, but current assets are assets that the value they can give you cannot exceed more than one accounting period. All right, so like cash, for example, inventory, okay, prepayment. So we call these current assets. Okay, so asset basically is a resource controlled by the organization, by that business entity that is expected to generate future economic benefits. Okay, then you have liability. So a liability can be defined as a legal obligation to transfer assets or provide services to another entity that arises from some past transaction or events. So there is a legal obligation. The company is owing another company, right? Because they've gotten value which they've not paid. So you have to pay for that value either in cash or by rendering service. Okay, that is what we call liability. So liability could be in any form. It could be in form of a loan, right? You've collected loan. So in the books of the company that gave the loan, you are a debtor, so you have to pay them. So you have to record that loan as a liability. It's not an income because you're going to pay. All right. Or you have collected money for a service you have not yet rendered. All right. So the money is there. You have received the money. So 10 million paid into your company account, but the goods have not been delivered. It's still a liability. It's not revenue. All right. So that is what we mean by liability. And of course, liability, we still have non-current liability. We have current liability. So non-current liability like long-term loans, liability that will be settled over more than one accounting period. Okay. Then of course, short-term liability, now called current liability, that is liability that you are going to clear. You're supposed to clear within an accounting period. Okay, so provisions are amounts provided to allow for liabilities that are anticipated but not yet quantified precisely, or for reductions in asset value. Like I was talking about that in the previous video when we were talking about prudence concepts. So this is where you need prudence, like this area of provision. So like I was giving an example of a court case. There's a court case against the organization. We don't know how it's going to be, but it's clear that we are going to maybe have some financial judgment against us. So we have to provide for that judgment. Okay, of course, taking into consideration a lot of factors. Okay, so that is what we mean by provision. We are very sure that there's going to be an outflow, but we are not sure of the time, or we are not sure of the exact amount. So we make financial provision. All right. So this is example of just do some little calculations on accounting equation, statement of financial position. So you have this guy, Kendi, a plumber, decided to start his business by opening a bank account for business transactions and depositing 200,000 into it on 1st July 20x2. Now, what we do, which we'll still talk about how we do accounting calculations. So you have introduced a capital of 200,000, and that money is not kept in your office, it was kept in the bank. And of course, you're going to open a bank account in the name of your business, right? So Kendi opens a bank account in the name of his business. So if we are going to open a cash flow, right, for that bank. So what do we do? Assets of bank has increased with 200,000. So what we do is I will debit assets, bank account. Every time an asset account increases in accounting, we debit it. All right. And every time an asset account decreases, the accounting will credit it. All right. Every time a capital account increases in accounting, you must credit it. Every time a capital account decreases in accounting, you must debit it. Now, those rules are very, very important. I will talk more about other rules later, expenses, reserves, and the rest of them, purchases. But for now, let's limit ourselves to assets and capital. So this time around, we have introduced 400,000, which means you need to credit capital account because the capital account has increased 200,000. With debit bank account because the asset of bank has also increased. So this is our statement of financial position as at 1st July 2022. So assets, under assets, we have cash at bank, 200,000. Under equity, owner's capital, you have 200,000. So this is what we call statement of financial position. It has balance. Okay, we have not started spending out of the capital in the bank. So you can see the debit leg 200,000, the credit leg 200,000. If the accountant can go home and sleep in peace. All right. Then something now happened on July 2nd. Kendi draws out 80,000 cash and spend it all on purchasing tools. All right. So now we have spent 80,000 cash. We have withdrawn 80,000 from the bank. So which means the bank account has reduced from 200,000 to 120,000. So you can see that is why the cash at bank is reading 120,000 now. But we bought tools. So we have new assets, okay, which we call tools here. Kendi is a plumber, so he has bought plumbing tools. So plumbing tools now worth 80,000 have been bought. Now, so we create another book. Remember in the other video, we talked about the chart of accounts. So depending on the organization, you create the ledgers that are relevant for your organization. So we create a tools account or plumbing tools account, depending on the nomenclature we want to use. So you can see here that the value is 80,000. But the owner's capital is still 200,000. What has changed is the cash at bank. It has reduced by 80,000, and we have created another asset account 80,000. 80 plus 120 will give us asset of 200,000, owner's capital 200,000. Our statement of financial position is still balanced. So basically, this is what we mean by accounting equation. So what it simply means, just like in chemistry, chemistry today, they have chemistry students, they have chemical equations. And of course, the two sides must be equal. So the same thing in accounting, the two sides of assets, okay, and capital plus liability must always be the same. So basically, that is what accounting equation is all about. If you have any question, you can post it under the comment side, and I'm going to respond to you individually. I will post more videos as we continue. If you have not subscribed to this channel, try and do so now. Thank you.